guys, it's Doc's Market Minute for Tuesday, September 22nd. Now, if you go back to yesterday's video, what I was saying is that really all we have to do is watch this trend line to see whether or not this is going to fail to the downside. We felt that in the context of what was going on is that we have a weekly downtrend, so more than likely we would see, we have a higher probability of the price continuing to go down and perhaps retesting or undercutting the recent low in October. Now, bottoms are a process. These will be very spiky when we get down to these. You'll see these recover very, very quickly from these levels. So we don't tend to just fall down and then slowly dribble down like this once it reaches that point. Now, we have had market moves that slowly we've had buyer strikes before, but a lot of times these moves are very, very sharp. So just like what we talked about yesterday, we had almost a 30-point pre-market gap this morning down below, and that pushes the price down below this trend line. So now the question is, where is this going to stop? And so the levels that we need to watch for, well, a couple of things. Before I get to the levels, what happens is that reversals start from the inside out. So we were heading in a little daily uptrend here with higher highs and higher lows. And so far that has not been broken, even though this is potentially a lower low, but not yet. But what happens is the 78-minute chart starts to falter first. And so it shows the change in polarity first to the downside. And all this is really doing on the daily chart is just pulling it down. This is just a daily pullback so far. This is not a change in polarity. This is not a trend change on the daily chart until we see it put in a lower high and then a subsequent lower low. Then we have a change in polarity, right? So this is just a pullback so far, and how we delineate that pullback from something else is not only the trend, but also this is where we can use the fibs as well too. If we look at the fib retracements of this move here, all the way from the bottom up to the top of this swing, what we have to worry about is that 61.8% retracement, which is going to be right at 1925. If the price is able to hold above that, then this is nothing more than a deep pullback, which could get reversed to the upside again, and then we haven't lost trend. But if we see the price going down below 1925 on the cash S&P, this is not the S&P futures, but this is the cash SPX. If we see it going below 1925 and closing there, especially the close, then we have a higher probability of the price going all the way down here to fill in the triangle. And typically what I see on these types of moves is an undercut. So an undercut for this. So if we do get that move, it's going to be actually pretty quick compared to 2011. 2011 we had about 2 months of sideways movement before we got that undercut. So this in some ways is a little bit more bearish if we do get the undercut right now. And so if that occurs, really what's happening to me is that if we pull back and go over to the left-hand side here on the monthly chart, then what we're seeing is a retest really of the lows of those October lows in 2014, perhaps down at 1800 is where I would expect to see this find some support. I would expect to see a very, very strong rebound from here. And this is where we get into this mode of disbelief, where we see the rebound from here. And we'd have to watch very carefully to see if a lower high sets up around 2000. So that'll take a couple of months for that lower high to set up, if it does. Otherwise, we could see the price rebound above and beyond that 2000, and that's it. So that's our correction for the year. But if a lower high sets up and rolls down below here, we could be looking at levels down here near 1600. So what happens over the next few weeks is going to be really, really important for what's going to happen in the market going forward for the next year or so. Okay, guys, that's it for today's Market Minute. Thanks for listening, and we'll see you tomorrow.